Hello friends, and welcome once again to e-classroom of Ahmednagar College, Junior Wing. Students, we are studying today retirement of a partnership. Example number 2. In previous some lectures, we were studied some theory and one example of retirement. In this, I have come with one more interesting example of retirement. Let us see what that example is. Example number 2. Given below is the balance sheet of Reena, Tina and Meena, who were sharing profit and losses in the ratio of their capital. Balance sheet is given as on 31st March 2020. Liabilities and assets, you can see it on your screen. Capital account, Reena, Tina and Meena, their capital balances are given. Reena 50,000, Tina 20,000 and Meena 30,000. Creditors are given 10,000, bills payable 5,000. Assets are given, machinery 20,000, building stock, debtors 12,000 less RDD 1,000, cash 17,000 and total of the balance sheet 1,15,000. Meena retires from the business on 1st of April 2020 and the following adjustments were agreed. Let us see which are those adjustments. Number 1, stock is to be valued at 92% of its book value. Number 2, RDD is to be maintained at 10% on debtors. Number 3, the value of building is to be appreciated by 20%. Number 4, the goodwill of the firm be fixed at rupees 12,000 and Meena's share, that means retiring partner's share in the same, be adjusted in the accounts of continuing partners in gain ratio. Then the entire capital of the firm to be fixed at rupees 1,60,000 between Reena and Tina, that means remaining partners, in their new profit sharing ratio, which is given 3:1, making adjustment in cash. Number 6, amount payable to Meena, that means retiring partner, paid in cash. And at last, prepare a revaluation account, partners capital account and balance sheet as on 1st of April 2020. मित्रांनो, इथं आपल्याला एक बॅलन्स शीट दिलेला आहे. त्यामध्ये रीना, टीना आणि मीना या तिघी पार्टनर्स आहेत आणि त्यांचं बॅलन्स शीट आणि काही ॲडजस्टमेंट्स दिलेले आहेत. त्यावरनं आपल्याला रिव्हॅल्युएशन अकाउंट म्हणजेच प्रॉफिट अँड लॉस ॲडजस्टमेंट अकाउंट, पार्टनर्स कॅपिटल अकाउंट आणि बॅलन्स शीट तयार करायचं आहे. एकदा रिव्ह्यू पाहूया मराठीमध्ये काय नेमकं ते एक्झाम्पल आहे. आपल्याला बॅलन्स शीट दिलेला आहे, लायबिलिटीज अँड ॲसेट्स आत्ताच मी त्या वाचल्या. त्याचबरोबर काही ॲडजस्टमेंट दिल्या, त्या एक थोडक्यात मी तुम्हाला एक्सप्लेन करतो मराठीमध्ये. स्टॉक जो आहे तो 92% कमी करायचा आहे, म्हणजेच 92% दाखवायचा आहे. त्यानंतर RDD जो आहे तो 10% डेटर्सवर करायचा आहे. त्यानंतर बिल्डिंग जो आहे ॲप्रिसिएटेड, म्हणजे बिल्डिंग वाढवायची आहे, त्याच्यात ॲप्रिसिएशन करायची, वाढ करायची आहे 20%. गुडविल 12,000 रुपये फिक्स करायचं आहे. त्याच्यामध्ये फक्त मीना शेअर म्हणजे रिटायरिंग पार्टनर जो आहे त्याचा शेअर आपल्याला दाखवायचा आहे आणि तो शेअर जे रिमेनिंग पार्टनर्स आहेत त्यांना दाखवायचो आहे त्यांच्या गेन रेशिओमध्ये. त्याचबरोबर फर्मचं जे कॅपिटल आहे ते कॅपिटल 1,60,000 आहे, फिक्स करायचं आहे आणि ते रीना आणि टीना यांना न्यू प्रॉफिट शेअरिंग रेशोमध्ये दाखवायचं आहे. न्यू प्रॉफिट शेअरिंग रेशो इथं दिलेला आहे 3:1 आणि ज्या ॲडजस्टमेंट्स आहेत त्या कॅशमध्ये दाखवायच्या आहेत. त्याचबरोबर अमाऊंट पेबल टू मीना, म्हणजे मीनाला जे रिटायरिंग पार्टनर मीना त्यांना जो काही बॅलन्स त्यांचा द्यायचा आहे रिटायर होताना तो पूर्णपणे कॅशमध्ये द्यायचा आहे असं इथं सांगितलेलं आहे. तर चला आपण तयार करू रिव्हॅल्युएशन अकाउंट, पार्टनर्स कॅपिटल अकाउंट अँड बॅलन्स शीट ॲज ऑन 1st April 2020. You can see friends, solution number 2 of this example. Let us start in the books of Rina, Tina and Bina. Revaluation account, debit side, credit side, particulars amount. Again partners capital, particulars, debit side, credit side, Rina, Tina and Bina. Again credit side, Rina, Tina and Bina, particulars. First, we'll solve revaluation account and partners capital account simultaneously, and later on we'll solve balance sheet. Okay, so let us start friends with example number 2. Let us see example number 2, and you can take any side first. So I just take liability side, capital accounts, Rina, Tina and Bina. Their capital balances are given. First, let us see their profit sharing ratio. What will be their profit sharing ratio? I have prepared one working note for that, and in that I have shown that Rina and Tina and Bina, their capital balance are 50,000, 20,000 and 30,000 respectively, and that is why their PSR, that means profit sharing ratio, will be 5:2:3. You can see at last of this PPT. So let us start with solution number 2. Capital balances of Rina, Tina and Bina by balance carried down in capital account. You can see credit side of capital account. Rina 50,000, Tina 20,000 and Bina 30,000. Then creditors. Creditors will be considered in balance sheet. So here it will be not shown. After that, bills payable, again liability side. Come to asset side. Machinery, there is no adjustment to machinery, so it will be considered in balance sheet. Friends, I have red marked some heads here for the purpose of adjustment. Just we can come to know about adjustment. You can see building, stock, debtors. All these three are red marked, so that we can come to know that these heads are having adjustments. So machinery will directly go to asset side. After that, building book value or balance, opening balance is 55,000 here, and there is an adjustment to building. Let us see what is the adjustment. You can see adjustment number 3, the value of building is to be appreciated by 20%. That means 20% of 55,000 will be rupees 11,000 and it should be appreciated. That means value of building is increased, and so it is our gain. So it must be shown to credit side of revaluation account. You can see by building account 11,000. After that, stock. There is again adjustment of stock. Stock is to be valued at 92% of its book value. So that means stock is to be reduced by 8% and only 92% should be shown. So it will be debited due to decrease in value of asset. It is actually loss. So to stock account 960. Then debtors. Again it is said that RTD is to be maintained at 10% on debtors. You can see debtors amount is rupees 12,000. That means 10% of 12,000 will be 1,200. But here only RTD 200 is credited. Why? Because 1,000 rupees RTD is already considered here. You can see on your screen asset side debtors less RTD 1,000. That means we only have to create 200 rupees for RTD. So it is also loss for us, and that is why we will see RTD rupees 200 to RTD account rupees 200. Then cash account. Cash account will be considered in balance sheet, and there are further transactions in cash. We'll see cash account later on. I have already prepared it. Okay. So let us come to example. we have considered liabilities along with assets. Then our revaluation account is completed. So let us find out first whether there is a profit on revaluation or loss on revaluation. I can compare both the sides, and I found that credit side of revaluation account is more than debit side. So I took a total of credit side rupees 11,000, taken that total to debit side, and deducted stock and RDD 960 and 200 rupees from 11,000, and I got the amount 9,840 rupees, and it will be the profit on revaluation, and it will be distributed amongst the three partners, Reena, Tina and Meena, in their profit sharing ratio. Just now I shown you your working note of profit sharing ratio, that is 5:2:3, and the amount are 4,920, 1,968 and 2,952. It will be transferred to partners capital. So let us transfer it. So you can see partners capital account. We have taken a balance of partners capital first, 50,000, 20,000 and 30,000. Again, profit is transferred by profit and loss adjustment account. Profit 4,920, 1,968 and 2,952. So profit is transferred to partners capital account. Again, let us come to an example. Which are the adjustment we have to consider here in capital account? So we have considered adjustment number 1, 2 and 3. Let us come to adjustment number 4. Goodwill of the firm is fixed at rupees 12,000, and Meena's shares is to be adjusted in the accounts of continuing partner in gain ratio. I have prepared one working note here for your convenience and understanding. Let us see goodwill. It is said that goodwill to be fixed in rupees 12,000. You can see the your screen. Number 1, working note number 1, goodwill. Goodwill is fixed at rupees 12,000, and Meena's share in goodwill as per the old ratio will be, Meena's share is 3/10. So 12,000 into 3/10 is equal to 3,600. That means adjustment of rupees 3,600, that is goodwill, is to be made. And it is also further said that rupees 3,600, that means goodwill, to be adjusted in between remaining partners Reena and Meena in their gain ratio. The gain ratio is 5:1. Again, here in working note number 2, I have given calculation of gain ratio. Gain ratio is equal to new ratio minus old ratio. You can see the calculation of gain ratio, and we at last got gain ratio is equal to 10:2. That means 5:1, and this goodwill is then distributed in the ratio of 5:1, and we have passed 2 journal entries for this. You can see on the screen journal entries. First, for fixing or creating goodwill, raising goodwill account debit to Meena's capital account, rupees 3,600, and then later on it is debited to partners capital account, remaining partners. You can see Reena's capital account debit 3,000, Tina's capital account debit 600, and to goodwill account 3,600. You can see in capital account here. First, it is credited to Meena's account by goodwill account rupees 3,600. Then it is debited to partners capital account, but only to Reena and Tina, to goodwill account rupees 3,000 and rupees 600. That means This adjustment is completed. Next adjustment, it is the entire capital of new firm be fixed at rupees 1,60,000 between Rina and Tina in their new profit sharing ratio, which is fixed at at 3:1, making adjustment in cash. So first we have to fix the capital at 1,60,000. We can see again working note for capital adjustment. You can see working note number 3, capital adjustment fixed at rupees 1,60,000 between Rina and Tina in their new profit sharing ratio 3:1. Then that means Rina's capital, Rina will get rupees 1,20,000, 1,60,000 into 3/4, 1,20,000, and Tina's capital 40,000. That means Rina's capital is adjusted with 1,20,000 and Tina's capital is adjusted with rupees 40,000. You can see capital accounts, 2 balance carried down. That means the balances of closing balances of capital accounts of Rina and Tina must be rupees 1,60,000, and for Rina it must be 1,20,000 and Tina 40,000. So you can see 2 balance carried down, 1,20,000 Rina and Tina 1,40,000. So next, let us see next adjustment. It is amount payable to Meena paid in cash. Now let us first find out amount payable to Meena, that is retaining partner. First, so we have considered all the adjustment of Meena first. So make a total of credit side of capital account of Meena's account. So we got 36,550. Take that total to debit side, and again there is no debit amount to Meena's capital, and so we enter got rupees 36,552 to Meena's capital, that is amount payable to Meena, and it is said that it is entirely amount is paid in cash. You can see 2 cash account, and here you can see cash account, that is by Meena's capital account 36,552. Later on, let us see the balances of Rina's and Tina's account. Now we have to first find out the balances to be brought by Rina and Tina in cash. So make a total of debit side of capital account of Rina, that is 1,23,000, and Tina, that is 40,600. Take it to credit side. In Rina's column 1,23,000 and in Tina's column 40,600. We got balance 68,080 rupees to Rina and 18,632 to Tina, and that they should bring in cash. You can see in cash account opening balance, you can see opening balance of cash account 17,000. It is taken to opening balance 17,000. Then Rina and Tina, they brought cash. We can pass journal entry cash account debit to Rina's capital and to Tina's capital. You can see to Rina's capital account 68,080 and Tina's capital account 18,632, and remaining balance, that is balance carried down of cash, is 61,160. We will consider it in balance sheet. So let us see now prepare balance sheet. For that purpose, let us come again to example. So take one by one. First we will take liability side, capital accounts. Now closing balances of capital account will be considered. Capital account on liability side, Rina it is said that it is fixed to 1,20,000. Tina 40,000. Then creditors, there is no adjustment, so we'll take it as it is. Creditors 10,000, bills payable rupees 5,000. Now let us come to asset side. Machinery, again there is no adjustment to machinery here, so it is taken as it is, rupees 20,000. You can see asset side of balance sheet. Then building, rupees 55,000. There is an adjustment to building, so let's take it in inner column. Building rupees 55,000. So let us see what is the adjustment. The first effect, we have shown it in revaluation account. It is credited. The value of building is to be appreciated by 20%. That means building will be appreciated by 20%. Building add appreciation rupees 11,000 and total that is rupees 66,000. Stock rupees 12,000. Again stock to be valued at rupees 29%, 22% of book value. So let us take book value in inner column. Stock rupees 12,000 less reduction rupees 960, 11,040 in outer column. Then debtors rupees 12,000, debtors less RDD. Now we have to consider 1,000 plus 200. Debtors 12,000 less RDD rupees 1,200 and outer column rupees 10,800. And at last cash account, we have found out the balance of cash, closing balance, that is 67,160, and it is taken to balance sheet side. Balance sheet. And finally we have to make a total of liabilities and assets, because liabilities must be equal to assets. So we take liability side 1,75,000 and asset side also 1,75,000. That means our balance sheet is tallied and we can conclude that our accounts are correct. So friends, we have studied one example of retirement in this, and this chapter will be continued in next lecture with more practical examples on retirement. Stay at home, be safe. Until then, bye and God bless you.